AGT Foods listed publicly this week, launching a $450 million IPO. That was Monday. It was the same day the TSX dropped like a stone. Murad Al-Katib, CEO of AGT Foods, joined us now to talk about the IPO. Thanks for your time.
Thanks for having me.
So did you see this as just bad timing?
You know, when you take a long-term view of a company and you know, the listing process obviously is a decision we don't do for one day or 1 week of trading. You roll with the punches and you focus on the fundamentals of your company and deliver.
You mentioned that it is a process that takes a long time. Could you have held off if you wanted to?
You know, you get to a point where you've got to make a decision, right? And, you know, the week before the listing was finalized, you know, we hadn't had a war starting yet. So anyway, the decision was made. And again, no regrets. We wanted to take the company public again, get back into the public markets. Fairfax and you know, management founders decided that the time was right, and we're going to focus on executing free cash flow and growth. And you know, protein and dietary fiber is a fundamental in the market, and we're very excited about the future.
You mentioned the conflict, which of course began on the weekend. Does it affect your business operations at all?
Well, you know, we certainly have a very large business in the Middle East region. Of course, lentils, chickpeas, peas, beans are staple consumption items. And, you know, we're very active actually with the United Nations agencies on the Gaza refugee program and other things. So, you know, certainly, you know, we're watching the conflict very carefully. But, you know, unfortunately, you know, for the world, we're going through this conflict. And, you know, upon resolution, food is going to be a very important part of the resolution. So, you know, again, our factory operations in Turkey are fully running with no effect. You know, obviously the Mediterranean region is sitting, you know, in a very different position. So we're waiting for the resolution, and, you know, our assets and our supply chain is going to be ready to be shipping what we believe is going to be large volumes of food needed to stabilize the region.
So are your shipments halted at a certain point right now? Have they been halted since the weekend?
Yeah, I mean, everyone in the world, it's not AGT specific, you know, steamship lines and container ships are obviously, you know, halting shipments around the world. We were very fortunate, actually, that we had a large volume of cargo that arrived into the United Arab Emirates just recently, just prior to the shipping line stopping. The balance of our cargo mostly is already at transshipment points, just more in you know, Panama Canal or in Europe. So we have a very integrated supply chain, Marilla. We're going to be able to take that to other clients that are looking for cargo, and you know, then we'll reship when the conflict is resolved. So
I was going to say, how long before this problem in the Middle East becomes more of a problem for your bottom line?
You know, again, we're diversified. We're shipping to 127 countries around the world. And, you know, the Middle East is one, you know, important region. But, you know, this is pretty, in terms of stopping shipments, it's pretty localized into the Persian Gulf region. So, you know, we do have notifications now that a number of the ports in Saudi Arabia are open. You know, we have, you know, ports even on the other edge of the United Arab Emirates, you know, that are still open. Fujairah, for instance, is open. Jebel Ali is not. So, you know, we don't, you know, anticipate that, you know, this conflict, number one, we hope it won't have the duration. But number two, we don't see a material effect on our business going forward.
You've got some workarounds. Okay, let's talk about 2025 revenue, which came in at $815 or $830 million. That's the estimate, I understand, down from over $1 billion in 2024. So what led to that drop?
Again, just we divested a business to get ready to go public. We actually sold a bulk handling business. We're really focusing on the packaged foods and ingredients, the better for you, gluten-free, high protein, high fiber, breakfast cereals, bakery and snacks markets, gluten-free pasta in the US, and pasta manufacturing around the world. And so when we divested some businesses and commodity prices came down, it leads to a lower revenue, but very consistent EBITDA. And, you know, we see consistent growth going forward in both revenue, EBITDA, and free cash flow. So from that perspective, you know, the business has really transformed from when we were public before. This is a packaged foods business now. When we were public, we were 18 million of EBITDA on the packaged foods. Today, we're 92 million and growing. And, you know, that packaged foods business, the health and wellness trend is not a fad. Protein and dietary fiber are fundamental. Demographics are driving it. GLP-1 drugs are driving the need for dietary fiber and protein And I call it the earthquake in the food industry. It's coming quick, and food companies have to react or they're going to be destructed by consumer demand. So from that perspective, lentils, chickpeas, peas, beans are important protein and fiber crops for the world.
Okay, so you took the company private only in 2019, so 7 years ago, and you went public again this week. What led to a decision to go back into the market?
Well, great partner in Fairfax. Fairfax owned 59.6% of the shares. They continue to own, call it 56% of our shares. So Prem Watsa has been an incredible partner. We did the $450 million public offering and a $200 million private placement of Fairfax on top. So, with the growth, EBITDA tripled almost in the period of 6 years on the privatization. Revenues doubled, EBITDA tripled, free cash flows growing. We wanted to get the balance sheet right. So, we've gotten down now, post-IPO, we're at 0.2 times approximately debt to EBITDA. That gives us a pristine balance sheet with high free cash flow conversion and growth platforms that are winning. And, again, the runways on dietary fiber, protein, and lentils, chickpeas, peas, beans, pasta is a long, long runway. So we believe that Canadian companies need to be public if they're strong and building a champion platform like we are. And we thought the time was right to do that.
Okay, so stocks at about 21 and a quarter. Your IPO is at 23. Clearly, you believe that, as you said, there's an earthquake kind of shift in the way people are eating. How are you going to restore confidence for shareholders?
Well, again, we're on day 4 of trading, and so we're going to take it again a quarter at a time, and we're going to deliver. And we were very clear in the IPO roadshow. We saw over 150 institutions around the world in a very involved marketing of the company. And, we believe strongly that, listen, free cash flow doesn't lie. And low leverage is going to lead us in a modular CapEx strategy where we can keep low CapEx intensity to growing our capacity in pasta and better for you packaged foods, that ultimately free cash flow conversion is really high with low leverage. The company's going to become very valuable. And that's what we're going to focus on. And, it's an unusual IPO. Fairfax sold no shares and subscribed to 200 million more shares. And me as the founder sold no shares. Usually it's the opposite. Sponsors selling at the peak, founders are trying to cash out. In our case, we rolled everything. We're going long term and we're going to deliver.